First, a bit about me. I'm a professional investor who has written several newsletters such as Metals and Miners for Money Week and Gold Speculator for Agora Financial. I'm used as a gold expert and speak at a lot of conferences throughout the world, and if people want to know about gold, they generally come to me. I've been investing for over 20 years and it's become second nature. I do it for a living. Now, in this brief video and the report, which you can get completely free without giving out your email address, I want to show you how you can start investing in gold. So I want to be nice and brief in the video, and there's a lot more information in the free report. Anyway, here goes. First up, you can buy physical gold. Contrary to popular belief, you can not only buy a broad range of products such as coins and bars, but you can also get them stored and insured for you, so you don't have to take them home. It's really easy. In the report, there's a link that takes you through to a bullion dealer that you can easily set up an account with and get yourself started. In many cases, you can sell stuff back if you need the cash. I find this really helpful. Another route is ETFs. A gold exchange traded fund is an investment fund that sometimes holds physical gold or derivatives to back its shares. The price tracks the price of gold and it trades like a stock. However, most investors don't have a claim on any underlying gold. The concept is really simple. Gold ETFs are intended to mirror the per ounce price of gold, and in theory, the shares of the ETF should move in tandem with the price of gold. Unfortunately, that's not always the case. There could be situations where that doesn't happen, but there are a decent approximation of the gold price, but perhaps they're not as perfect as you want them to be. For example, there could be a discrepancy because of the supply and demand of ETF shares, where if the ETF shares are in high demand, you could pay a premium for them. Similarly, if they're in low demand, they may be at a discount. So even though gold ETFs are very popular and they're convenient and easy to trade, and there's no need to store anything, no one's going to break into your house and steal your ETF shares. There are some pitfalls that investors need to be aware of, and I touch on these in my book. Finally, you can buy mining shares. Although these offer potentially higher returns, you may be taking on more risk, so it's really horses for courses. Like any shares, mining shares are all different. There's a wide range of mining companies out there, and just because you invest in one, it doesn't mean you've got exposure to the whole sector. For example, you may invest in a mining company that produces iron ore, which obviously does not give you any exposure to gold. Whilst on the one hand you can buy mining funds, which obviously have several companies in them, so you're getting a more diversified portfolio. I personally like to invest in individual companies, and I go into more detail about how I do this in my newsletters and my reports, and in the newsletters you can find out about my bridge system, which I go into more detail about in my book. If you buy the book, you can get a free bonus which is where the funds are investing. This gives you an insight into where the funds are putting their money. I would expect a fund to have carried out a lot of analysis prior to investing, so this could be very useful for you. Anyway, let me tell you a bit about mining companies. Obviously they're all different, but what you should look for is at what stage their flagship project is in. When I say flagship, I mean their main project. Broadly speaking, it's likely to fall into one of three categories. It'll either be in exploration, development, or production. I go into this in more detail in my report. Now, to get the report, you don't have to give me your email or anything like that. All you have to do is click on the link below or leave a message in the comment box below and I'll send it to you.